Thank you for tuning into another pre-market PulseScan edition. Today is Monday, July the 10th, 2017. I do hope that everybody had a wonderful, wonderful holiday. It seemed like a very long, extended holiday because of the way the 4th of July fell on a Tuesday. So, needless to say, I had a good one. Nice extended vacation. It was much needed. But now it's time to get back to work. So with that being said, let's look at the beginning of our first day back here to work. You know, it's always interesting because shenanigans seem to fall during holidays, and we've had a plethora of them. Where to begin first? Well, here is a chart of silver, and back here you can see this mini flash crash back on July the 6th, all right, when most people were out chilling after market hours. You can see the time stamp on the top right hand side. So it's 5 p.m. Eastern Standard Time, and the market dropped, all right, $2. It dropped from 1640 down to 1434 for no reason. And it did it only with 20,881 volume. That's it. That was the volume. All right. We've had triple and quadruple that amount of volume, and the market barely moved. All right. Like here on this day, 74,000 in volume right here. But on this, in this moment right here, we had 152,000 in volume, and it did this. Now, the hour that it did it, we only had like 20-some thousand in volume. Once again, we've had a lot more than that if you look at this chart down here, and the market barely moves. And on this 1 hour bar here, I'm sorry, this happened at 7 p.m. the 7 p.m. hour. So this was between 6 and 7 p.m. Like I said, the market was closed. The market is technically closed, all right, at that point. What happens is, like 6 o'clock p.m. Eastern Standard Time, the markets reopen for the next trading session. That's usually where that happens. And again, this happened on July the 6th. All right, so technically speaking, the 4th was Tuesday, right? So this happened on Thursday. Now, as you know, most people were not really trading on this day, but yet we had some kind of volume. And with no explanation, this is what happened. No explanation afterwards. Now, normally when situations like this happen, you know, we get a bad tick, is what you call it, things of that nature. But I'm here to tell you that in the precious metals markets, it doesn't apply. Let me explain what that means. Normally, if this would have happened in, like, let's say the emini S&P 500 or something like that, it's okay. There's a bad tick. We'll correct that. No worries. No trades happen if it's just a bad tick or something. But in the precious metals markets, this seems to be the norm, where, you know, right on the close, or like 5 minutes after the close, or right after an open, just something weird happens like this, and there's no explanation. They don't say anything about it. It's not a bad tick. They say, yep, price is traded at this point, and you got stopped in or stopped out. It's just how it happens. And technically speaking, the precious metals markets on the future side, when you compare it to other futures contracts, these are one of the ones we say are thinly traded. All right. So because of that, you know, theoretically speaking, prices should be easily pushed around. But as we know, this is not the case. Many days and hours pass by where you don't get this. So this here is very, very telling. Something's going on. something nefarious is going on. The reason why I say it's something nefarious and not just the norm of the futures markets, excuse me, is because this also affected the equity market, and that's a problem. If you look at ticker SLV, you will see that around at the same moment in time, this happened. Here it is. All right, this is the 7 p.m. bar. All right, so between 6 and 7 p.m., this is what's happening in SLV. Let's go back a little bit. All right, here is the 7 o'clock p.m. bar there. Let's go back and find the next one. Here's the 7 p.m. bar here. All right, see this 7 p.m. bar versus this 7 p.m. bar. All right, this is the norm around this time. This is not the norm. On this particular bar, you have 139,000 contracts, and on this one, you have only 1,000 contracts. See the difference? Why is this not normal? It's many times where the futures can move and do things, you know, after hours for equities. And normally the equities are not touched. Like I always said to you guys back in the day, and it's always been the case up until now, equities are better priced than the futures. Pricing has always been more stable on the equity side when we're talking about the indexes and things of that nature, like the Dow, the NASDAQ, the S&P, things like that, all right? SLV, GLD, they're normally a lot more stable in pricing than their futures counterparts. But in this case, on this day, at this moment in time, the silver futures was smashed down, and so was SLV. And that is why this is nefarious. This almost never happens where in the, excuse me, in the wee hours of the morning, wee hours of the night, where your paper market will also affect the equity market. It normally does not happen that way, and especially not simultaneously. This was a coordinated effort. All right, this was a coordinated effort. It affected both exchanges, the equity side of the market, as well as the COMEX. So something is going down. The reason why this is an issue also is because we've been having all types of shenanigans going on. We had flash crashes in gold not long ago. We had a situation at the NASDAQ, again, during the holiday time, during the 4th of July season. We're having issues at NASDAQ where, again, after hours, everybody's, you know, frying up hamburgers and hot dogs and shooting off fireworks. And all of a sudden, the NASDAQ is having problems, and $1,000 stock is now priced at $100. That's not normal. That is not normal, ladies and gentlemen. That is not normal. That is not normal market activity. And we keep getting these little blip stories about issues like this. And it's becoming a conspiracy because once in a blue moon, you have a situation, like I said, you have bad ticks, things like that. But you don't have these flash crashes like this, not back to back to back in various exchanges. All right? This is not normal. I repeat, this is not normal. This is not random. How do you have the issue with gold not long ago? Then you have the issue with the NASDAQ exchange. Now you're having issues with COMEX. All right? And these trades are not busted, ladies and gentlemen. They don't bust them. Now on 9/11, they busted every freaking trade that happened during the awful events that transpired. When I say busted trades, I mean erase them off the books. They don't even exist in history. You can't even buy market data for that. It doesn't exist. Not in the commodities markets, not in the equities markets. You can't find it, not even the forex exchange. They made up some data, and in most cases, they just skip over the date of 9/11 altogether. All right? But on this, they let these ride. Now, for those of you who follow this channel, you know that these are pointers, all right? This is a massive pointer, and it's letting you know where prices are going to be headed. And look what happened. Wow, prices have headed there. All right, these pointers are a big deal. They mean significant things, especially on a chart, a daily or weekly chart, and it's letting you know where prices are headed. Do you recall the chart that I put up a while back showing you the trajectories and the time frames for gold and silver? Do you remember that? And if not, I suggest you go back and watch the video, because I was showing you some price trajectories and also timelines that went with it. And you would do well to remember that. And I showed you where we were at the crossroads, and I showed you what things were looking like and where we will be headed. And that's exactly what's happening here. All right, if you recall. And unfortunately, that's the way we're going. The market has chosen to go the downside first. So this is going to continue up until at least the end of August. And that's what we got going on. We got momentum pointing south. We got price action pointing south. Trend lines falling below the Kumo cloud of death. I mean, all the negative momentum is on your side, and the market is continuing to be sold off. Likewise, we've been experiencing other issues too with the whole cryptocurrency situation. Russia is pushing to put their nation's currency on the blockchain. China is doing the same thing. All right, so you got two world superpowers saying, you know what, we're going to start utilizing the blockchain and put our currency on it. The blockchain has multifaceted purposes. I've explained that to you guys ad infinitum. So now you're starting to see these things take place, just as I told you it was going to happen. And this is just the beginning. This is just the tip of the iceberg, folks. More and more times are a-changing, and you're going to start seeing these changes more and more, and it's going to be in your face. The powers that be don't even care anymore. They're not even trying to hide it. They're just putting it in your face. With talking about the blockchain also, you need to understand that the government, the powers that be, have been trying to infiltrate the space because they want to learn all they can about the technology so they can come up with their own that they can control. As it stands, they can't control the technology that's already existing. They can't go in there and control the blockchain as it is with Bitcoin and Ethereum and Veritasium, etc., etc. So they're going to come up with their own, and then they're going to make it unlawful to even do business or anything except for their situation, or make it extremely difficult, which they've been trying to do already with trying to get laws passed to make it difficult for you to deal and do things that you need to do. So with that being said, let me also add, and I keep going back and forth over this, you guys, all markets that are on an exchange, if you're trading anything or buying or selling anything on an exchange, that is a form of trading. I'm sorry, you're still trading. All right, trading is considered speculative. It is not gambling. It is speculative. For those who do not know about the blockchain and the Bitcoin technology, you need to do yourself a favor and educate yourself before you come on social media and saying ridiculous things about the blockchain technology, the Bitcoin, etc. It's burgeoning and not going away, to borrow a phrase from my man L.A. Marzulli. All right, it's not going away. All right, and yes, it is money. All right, Bitcoin and the Ethereum, the Veritasium, your Litecoin, all the other coins, it is money. It is money. It is money. How is it money? I can't go to my local grocery store and buy something with Bitcoins. Wrong answer. Yes, you can. They now have debit cards that you can transfer your Bitcoin into any currency you wish, whatever the currency is in your country. And there are many, 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 many providers. You need to educate yourself. You can transfer your Bitcoins from your wallet into these debit cards and go shopping. You can shop online. You can shop any place that they accept MasterCard and Visa. So to say that it's not money is foolishness. It is very much so money. All right, they've made it easier to transact your investments and translate them into the currency of the day, wherever you are. There are even companies that will do that with your gold and silver as well. All right, so people say, oh, you can't eat the gold and silver. That is also a lie. You can translate your gold and silver holdings into cash. I think even Peter Schiff was one of the pioneers of that. His company has a thing like that, where they issue you a MasterCard, MasterCard, Visa, debit card, where you can liquidate some of your holdings into cash and go shopping. So don't say that gold and silver is not money. Gold and silver is money and nothing else. Not only that, but don't forget the cryptocurrencies too are also money. All right, because they can be translated into the currency of the day. All right, you can't say the same thing with your baseball cards and all these other things. All right, you can't do that with all those other types of investments. You can only do it with currency, and they treat it as such because it is currency, and it's on a currency exchange, even though it's considered foreign because the central bank is not involved. All right, so it's not your currency exchange; it's the blockchain. The blockchain is the new currency exchange. And that's just the way it is, and you don't have to like it. You don't have to even accept it, but it is what it is. All right, and those of you who do not embrace this will become poor in the future because of it. So call it what you want. All right, yes, it is speculative, just like everything else in life is speculative. All right, but guess what? If you don't learn to speculate correctly, you will be poor because of it. It's just a fact of life, folks. All right, so moving right on. I'm off that soapbox. Cryptocurrencies is money. Whether you want to admit it or not, it doesn't matter. All right, because there are plenty of banking institutions that have already issued the cards that you can convert your Bitcoins into dollars. So once again, folks, just educate yourself before you make social media videos. All right. All right, moving along. All right, here's the GBTC. And as you can see, it's been pretty much just flat. All right. The ramp held it up over the trend line, which it was supposed to do. This is a critical juncture for it. Now we're coming up for the next ramp, so we should be able to get a bump here and start trending upward again here shortly. But as you can see, we got all the way down to 382. I was thinking we'd probably get a little bit lower, but that's still good. So it's holding its own here at this equilibrium. Let's look at the other one, BTSC. All right, BTSC. All right, same type of a path, but a little bit weaker. All right, this one is still questionable. This one right here. Only because of some of the controversy with some of the key people, architects of this particular ticker. All right, let's look at the other one here. What is it? It's on the tip of my tongue here. Oh, BTCF. All right, this one will probably have more promise. But as you can see, this one here got below the Kumo cloud, got in and out of it. All right, this one didn't hold up as well as the others. See what I'm saying? Same type of a trajectory, but it's overall a little bit weaker. All right, it's just a little bit weaker because of where it is in relation to the Kumo cloud, but it looks stronger. It's weird because it's below the cloud here, but if you look at the arc of everything and you see how it's behaving around the trend line, this one may be a little bit more realistic, if that makes sense, as far as what's happening. So we tried to come up here to, you know, you can call that like a failed top there, but we're not done yet. This pointer is there. It's not going anywhere. So I think prices are going to eventually break through there, but it's going to take a little bit of doing. It's going to take a little bit. This one does appear to be stronger. I think this one may be the one that's following a little bit better than the GBTC actually. Let's see here, GBTC. Let me just take a look at the volume on this too. Yeah, this is doing better than the GBTC right now. And let me see, BTSC. Yeah, but the BTSC is more widely held though. That's the only difference. That's the only difference. So, all right, just wanted to take a look at that closer. All right, now let's look at these equity markets. If you look at the XIV, it's telling you that we've entered that correction phase that I was also telling you about. And again, look at this big old spike here on the daily chart. See, this is another situation. On the daily chart, you fell from $86.55 all the way down to $73.69 before bouncing back up and correcting and closing at $82.17. But again, you got this massive pointer here. So again, when the markets flash crash like that and then come right back up, again, that's something nefarious going on. All right, either they're testing some type of situation going on, or there's other things that are afoot. This is not supposed to happen. Now, this is 41 million contracts. All right. But then here, this is 22 million. This is 12 million. This is not even giving you volume on this day, because this is where the market was closed, but that you still have this bar here. Interesting, right? They still got price action, but the market's technically closed on July 3rd. Then you got the next day 13 million. The day before this, you had 14 million. This day here, you're having 41 million, 9 million, 17 million. So a massive amount of orders came in, but that shouldn't be considered massive because you're averaging about, 20 million or so, about, anywhere from 15 to 20 million is your average. So how is it that you get a few more million and then these big bars happen? 41 million, 30 million. Let's go back. This is 13. So you're averaging here 7, 8, 14, 12, 10, 9. So you're averaging, about 15 million. And then when you double it, this happens. That's kind of weird. This market is big enough and widely held enough to handle that type of movement. Look, this little bar right here was 22 million by itself, that little teeny bar. You see what I'm saying? Something is going on that doesn't make sense. All right? Something doesn't make sense. This is, again, a pointer, but still, it's not normative. Even if this market does correct, it comes right back up again. All right? Not being allowed to fall. It's almost like some of the algorithms are going to war with each other, but they should not be allowed to push the market around like that. There's some type of connection between the exchange and these algorithms. The exchange, the algorithm that they're using to maintain market flow and continuity of price is being adversely affected by the other algorithms that are allowed to come into the exchange. It's almost as if the entities that are allowed to trade and use these dedicated lines that they have into the exchange on their servers, some kind of way when it's communicating and talking to the exchange's servers, it's being allowed to override the exchange's servers some kind of way. It's almost as if the high frequency trading people are allowed to supersede the market. I know it doesn't make sense, and I know I'm probably not saying it right, but you techies out there, you know what I'm talking about. You know exactly what I'm talking about. I'm talking just from what I know from working on the street and seeing how these situations work and being one of the perpetrators of such technology. But things have evolved since then in a big way. But the principles are still the same. And what I'm saying is it does appear that some type of way the order flow that's coming from the high frequency trading firms are able some type of way to almost arrest the functionality servers at the exchange where this can happen. Because technically speaking, this is not supposed to happen. I don't know how they are making up for or accounting for not having real people anymore on the floor, on the trading floor. It's a virtual trading floor now. It's all done with the algorithms and computer programs. When you had a human there and you had what is called a fast market is when, let's say, the average trading volume in any particular pit, we'll say ABC company or ABC commodity futures contract, had an average of, let's say, 50,000 shares or 50,000 contracts that go by at any given time, all right? And let's say on this particular day, you get 1 million contracts. Okay, now that just flooded and overwhelmed this particular pit. So now the pit has to call a fast market. Orders are coming in faster than they can process them. And when the brokers and traders on the trading floor get overwhelmed like that, they call the fast market. Fast market rules are in effect. And that means that they don't have to accept or allow limit and stop orders. They'll tell you the only thing we can accept is market orders. And in some cases where I've seen it where no order type can be guaranteed. In other words, you can't even be guaranteed a fill no matter what you do. That means you may not get in or out of the market at any price. It's just how it is. All right? Been there and done that. All right? Just talking to you from experience. And if you don't believe me, holler at my man Oscar Carboni, and he will tell you. Because he was there in the pit on that given day, filling orders from one of the firms I was working at. And to this day, we still joke about it. I tell him I'm waiting for my fills. All right? So it does happen. But that's back when you had humans involved. All right? And the floor brokers / traders were known at times, even to this day in certain pits in Chicago, to go home with tickets in their pocket, unfilled. All right? It's just how it is. But now you don't have the human element, especially for most of these equity side, ETFs and things. So even some of the commodity futures have gone electronic. They're trying to, they've been trying to get everything to go electronic. So for the most part, it is. But in this situation, you don't have a human being to say, hey, slow down, fast market, can't handle this right now. Instead, the control mechanisms seem to be arrested at this point with their arms behind their back. And then the algorithms are allowed to come in and take over and push price wherever they want to push it. And then simultaneously be able to get here, fill here, and then with the same amount of volume, push it back up again. It's a mysterious situation that's been ongoing and evolving over the last decade and becoming more noticeable now. All right, if you go back to pre-2008, you had it, sparingly. But when 2008 hit, it's as if someone just removed the veil and everything just went blah. All right, and just started hanging out there. So anyway, that's where we are, and that's where things have gone, and somebody needs to look into it because something is just doesn't feel right about this. We haven't had a situation like this where all this is happening at the same time. So it leads me to my other theory. My other theory is based off of the news that came out that the Chicago Mercantile Exchange, alias known as CME, is working on their own type of blockchain situation to allow cryptocurrency trading on the futures exchange. Now, that does not surprise me because, like I said before, there's a rush on the government side of things to come up with their own blockchain situation to take advantage of what's happening in the crypto space. They wouldn't do that if it wasn't money. Remember, if cryptos aren't money, it's just speculation and gambling, then why would exchanges spend tens of millions of dollars to come up with the technology to be able to take advantage of said speculative investment? Understand, it's always about money, folks, and if it's real, they want a piece of it. So with that being said, I think they've probably been testing out on various exchanges certain things. Like, what would happen if we do this? What happens if we do that? And the only way to do it is in real time in real markets. So I do think that some testing has been going on, folks, and they're doing it various exchanges, and it's happening, and there's nothing that anyone can say about it. And they've been tight-lipped. Normally they'll say, oh, it was a fat finger, or no. Remember, back in May the 10th of 2010, May 6, 2010, we had the quote-unquote fat finger, and supposedly, some person, they say, oh, well, did this and did that, and, if it was really all of that, you better believe someone would have been prosecuted and paraded in front of the cameras and the whole nine. When you don't see that, that means that there's nefarious things going on behind the scenes. And we know that day was a day of infamy, where we know for a fact the entire system was brought down simultaneously at the same time. That segues into the next thing I want to talk about. Over the holidays too, I don't know if you guys noticed it or were paying attention, but you had bonds, equities, oil, the US dollar, and cryptos down on the same day at the same time. Does someone want to take a stab at that and explain that to me? Where is Harvard Business School? Where is all of these Dow theorists and these individuals who like to wax philosophical about free markets and efficient market hypothesis? Where are my efficient market theorists? Can you please explain to the audience in a clear, concise manner how bonds, equities, gold and silver, i.e. precious metals, the US dollar, and your cryptos all go down at the same time on the same day? Can someone please explain that? I'll wait. Now, before you open your mouth, you need to, you got to be truthful. You got to stick to the facts, and you can't lie about math. Math doesn't lie. All right? When bonds are up, people are said to be making a flight to quality. When the stocks are down, bonds are normally up, and vice versa. And or you'll see situations where your precious metals will go up because, you know, people are going into safe havens and things of that nature, afraid of interest rates, all these different factors that come into play with the dynamic between precious metals, bonds, and equities. But then you see another issue you have. You have another problem with your explanation when you try to explain this, because when the dollar is strong, commodities are weak, and vice versa. The price of commodities have an inverse relationship with the price of the dollar. Strong dollar, weak commodities. Weak dollar, strong commodities. Well, what happens when the dollar's down and then the commodities are down too? And not only was that down, but guess what? It gets worse, folks. How is the dollar down and the euro down at the same time when they have an inverse relationship? Well, ladies and gentlemen, it was down too. Yep. You had your currencies against the dollar down with the dollar being down, and your cryptos were down too. I need someone to explain this. You can't. You know why you can't? Because it's nefarious. It's supposed to be impossible for that to happen. Efficient market theorists have been quiet. They haven't even discussed what I just said to you, even on CNBC. Nothing. No explanation, no nothing. Nothing. Now, I know some of the more bunny rabbit people out here will say, oh, the sky is falling. That's why, because the markets are about to crash. They're going to bring the markets down. No. No. They're not going to do anything to hurt their money. They only allow markets to fall to a certain point if they need to push a very important shadow government agenda. Then they'll do that. But they always bring it right back up. See, they always bring it right back up. They're going to protect their money. No, this is something different. I'm leaning toward my latter explanation of they're rolling out their own blockchain stuff and they're testing it market-wide. That's what I believe right now. All right, so I've spent enough time on that. Let's move on to something else. I know what you want to hear, so let's move on to where are the alerts for this week. Let's start off with we'll start with some 9/11 alerts. Let's see what I got on the screen for our 9/11 alerts. We'll do that first. Things of note. Do we have anything of note? All right, we have a few things here. For this week, I see Facebook is in a swing trade possibility to the downside. I do see that we have locked in momentum to the downside, and this should be interesting. We got overbought indicators in the British pound sterling, and so look for possible downside there. I'm showing overboughtness. So ticker FXB on the equity ETF side will be affected just as the pound sterling, the forex side of things. As far as crash alerts, there are some noticeable ones. We have a crash alert in U.S. Steel. What else is new? We have it in GDXJ, so the gold miners. We have it in the USO, and we also have it in UNG. Also Nintendo, and we have it in Litecoin. We have it in the copper futures. We have it in the euro, the Swiss franc, and the Aussie dollar. Ticker symbols FXE, FXF, and FXA. Silver miners, SIL ticker. GameStop has one. So does First Majestic Silver, AG. SILJ as well. Crude oil futures. And Nugget. And also Cobalt, ticker symbol CIE. Those are our noticeable crash alerts we have on the weekly chart for this week in those particular securities. As you know, these crash and rally alerts have been dead on. That's the way they are designed. All right. Now, sometimes it may take a day or two for these to materialize, but remember, these crash alerts act like gaps and pointers themselves in that they are predictive in nature, and they can lead the market 3 to 5 days out or 3 to 5 weeks out on the weekly charts. All right, so 3 to 5 bars out. All right, looking at our noticeable rally alerts for the week, we have the US dollar. And so ticker UUP will also benefit from that. Intel has one. Ethereum has a rally alert. Bitcoin has a rally alert. Let's see. Tekla, Healthcare Investors, HQH has a rally alert. The NASDAQ, by way of QQQ, has one. Let's see. Veritasium is showing a rally alert, so that should be interesting. NVIDIA has one. Your inverse ETF Dust has a rally alert, which it should if the miners GDX and GDXJ are going to pull back. Amazon has a rally alert. DGAS, which makes sense if the natural gas is going to continue to fall. And the XIV, which we talked about earlier, it has a rally alert. And DSLV, which makes sense if silver is going to pull back. And then last but not least, a rally alert in AMD. So this should be interesting because if Bitcoin has a rally alert, it does make sense that NVIDIA and AMD would have rally alerts. So let's see if we can get going here, folks. All right, so it should be an interesting week. So remember, if you have not done yourself the favor and the privilege of going over to pulsewavetrading.com, so you can learn how to navigate these dangerous waters of a growing threat of algorithms that have taken over society and taken over these markets. You need to learn how to navigate. You got to come over to pulsewavetrading.com and learn how to do so. Train yourself, invest in yourself, and educate yourself so that you can provide an extra income stream for you and your family. Pulsewavetrading.com, and remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.